Have you noticed how uncertainty makes everything feel closer, louder, and more urgent? When the economy trembles, the future seems to rush toward us, demanding answers we don't yet have. Numbers flicker across screens, headlines speak in sharp tones, and somewhere inside your body, something tightens. Many people respond by freezing, others by fleeing. But in nature, uncertainty is not a signal to panic, it is a signal to adapt, to observe more carefully, to move with intention rather than fear. This conversation is not about predicting what happens next, it is about learning how to stand calmly when the ground feels unsteady, and how to invest not with blind optimism, but with quiet understanding. I want to speak to you as one person to another, not as an expert towering above you, but as a fellow observer of patterns, patterns that repeat themselves in forests, oceans, and yes, in markets. If you are here, it may be because something inside you no longer trusts the story you are being told about the economy. Perhaps you feel cautious, perhaps uneasy. Perhaps you are tired of being told to just believe when nothing around you feels believable. If so, I want you to know this first. There is nothing wrong with you. Distrust is not ignorance. Very often, it is awareness. Most advice about investing assumes a world that is neat and predictable. It speaks of averages and long-term charts as though human emotion does not exist. Other advice goes in the opposite direction, feeding on fear, telling you to run, to hide, to abandon the idea of investing altogether until everything feels safe again. But safety, in the way we imagine it, has never truly existed. The economy has always been uncertain, always shifting, always surprising us just when we think we understand it. And yet, through wars, recessions, technological upheaval, and social change, people have continued to invest. They have continued to build, not because they trusted the economy, but because they understood how to live within uncertainty. Let me take you outside for a moment, outside the language of finance and into the rhythms of the natural world. Here, uncertainty is not an interruption, it is the default state. Seasons change without asking permission. Storms arrive without warning. Food becomes scarce, then abundant again. And still, life continues, not by pretending the danger isn't there, but by adapting to it. Think of winter. To a casual observer, winter looks like death. Trees stand bare, fields lie dormant, the world appears paused, even broken. But beneath the frozen surface, something extraordinary is happening. Roots grow deeper, soil rests and rebuilds, seeds wait, patient and prepared. Winter is not a failure of nature, it is a phase, a necessary one. And the plants that survive are not the ones that panic at the first frost, but the ones that were built to endure it. Economic uncertainty works in much the same way. When markets fall or news grows grim, it can feel like the end of something. But often it is the beginning of a different phase, one that rewards patience more than speed, preparation more than prediction. I often think of sailors at sea. They do not trust the weather. No sensible sailor ever has. The sea has always been unpredictable, capable of calm beauty one moment and terrifying force the next. Yet ships still cross oceans, not because sailors expect gentle waters, but because they trust something else entirely: navigation. They trust their compass, their maps, their understanding of the stars. The danger is not the storm itself. The danger is losing direction within it. When you invest, you are much like that sailor. The economy is the weather. You cannot control it. You cannot calm it by worrying, but you can choose how you navigate. You can choose what guides you when visibility is poor. Many people believe they must trust the economy before they invest. They wait for reassurance, for good news, for a feeling of certainty, and so they wait and wait, often missing years of opportunity, not because they were wrong to be cautious, but because they misunderstood what investing actually requires. Investing has never demanded certainty. It has always required humility, an acceptance that we do not know what comes next, paired with a strategy that does not depend on knowing. Here is a truth that may surprise you. The economy is not a single thing.
We speak of it as though it were a creature with one mind and one direction. The economy is strong. The economy is weak. But in reality, it's a vast collection of human activity, millions of businesses, ideas, failures, innovations, and quiet successes all happening at once. Some parts shrink while others grow. Some industries fade while others are born. When headlines shout fear, they flatten this complexity into a single emotion. Fear travels faster than nuance. You do not invest in the economy as a whole. You invest in parts of it, in people solving problems, in systems that produce value, in time itself. And this is where uncertainty begins to lose some of its power. Because while you may not trust the economy as a whole, you can learn to trust processes. You can trust diversification, not as a magic shield, but as a way of respecting complexity. You can trust long time horizons, which smooth the edges of short-term chaos. You can trust rules that guide your behavior when emotions run high. Fear, you see, does not punish patience. It punishes impulsiveness. The people most harmed by uncertainty are rarely those who stay invested thoughtfully over time. They are those who react, those who leap in and out, guided by headlines rather than principles. Uncertainty exposes emotion. It does not create mistakes, it reveals them. There is a paradox here that is worth sitting with. Those who accept uncertainty often suffer less from it. They do not waste energy fighting reality. They do not demand guarantees from a world that has never offered them. Instead, they ask a simpler question: what can work even if I'm wrong? Predictions are fragile things. They age quickly. Systems, on the other hand, endure. A good investing system does not require you to be right about the future. It only requires you to be consistent. It assumes that surprises will happen and builds resilience around that assumption. This brings us to another misunderstanding: safety. Many people believe that holding cash is the safest option when trust is low. And emotionally, this makes sense. Cash feels still, solid. It does not fluctuate day to day. But safety is not the absence of movement. Safety is the absence of fragility. Cash, over long periods, quietly loses value to inflation. It does not scream, it does not crash, it simply erodes, slowly, politely, almost invisibly. Risk, then, is not volatility. Volatility is movement. Risk is fragility, the chance that something cannot recover. A strong tree bends in the wind, a brittle one snaps. Long-term investing is not about avoiding movement, it's about choosing things that can bend without breaking. If you feel overwhelmed, pause here. Take a breath. You are not required to understand everything at once. Investing well has less to do with intelligence than with emotional steadiness. It's a skill of patience, a practice of staying present without reacting. One way to cultivate this steadiness is to shrink the time frame you react to. News thrives on immediacy. It pulls your attention to the smallest window possible: today, this hour, this minute. But investing thrives on expanded time, years, decades. When you lengthen your view, many fears lose their sharpness. A dip becomes a moment, not a verdict. Another practice is to build what I like to call an all-weather approach. In nature, ecosystems survive because they contain variety. If one species struggles, another thrives. Diversity is not a defense against change, it is an embrace of it. In investing, this means owning different kinds of assets that respond differently to the same conditions. You are not betting on one outcome, you are preparing for many. And perhaps most importantly, invest with rules, not moods. Decide in calm moments what you will do in turbulent ones. Write it down if you must. Rules free you from the burden of constant decision-making. They allow you to act wisely even when you do not feel wise. As we near the end of this conversation, I want to return to where we began, with uncertainty. You came here perhaps feeling uneasy, unsure whether it was wise to invest in a world that feels unstable. What I hope you see now is that uncertainty is not a flaw in the system. It is the environment in which the system operates. It always has been. You are not foolish for feeling cautious. You are not late for hesitating. You are simply awake in a world that has always moved this way. If this way of seeing things has brought you a measure of calm or helped you feel less alone in your questions, then it has done its work. If you wish, you may stay, share your thoughts, reflect with others, continue learning how to move gently and wisely through an uncertain world. And if you choose to subscribe, think of it not as a promise of answers, but as a shared practice of observation. The future has never been certain, and yet growth has always found a way.